Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. It's Wednesday. It's March 29th, and it's about 7:42 in the morning. The market's going to gear up to open up in just a little less than 2 hours. Now, as you can see here, the Nasdaq 100's up over 100 points. The Dow's up over 233 points. I'm glad we covered those shorts yesterday. Now, I was warning yesterday that I was warning everyone that Micron was coming out with earnings. And if the earnings were good, it can cause a potential rally in chip stocks, which is one of the reasons we closed out the SMH trade yesterday in the seasonality program, I believe. But the point is, the trajectory on Micron is higher, and that's one of the leading chip stocks. So we may see some upside move. If the stock drops by the end of the day, then we'll know for sure that semiconductors are on the way out. But if we get a little bit of a relief rally, and if we get some upside because volatility is down, as I'll go through in a minute, then the odds are that semiconductors and chips will be strong today. Now, volatility, and I haven't talked about volatility since, I think since the banking sector. And I told you that when we were up here, I drew this line and I said we're going down. Now, volatility has almost come down all the way to the base. This was the banking fiasco. So that tells me that the worst is behind us. Now, I didn't sell volatility, but I was telling you guys to short or buy a put on VIX around here. I hope you guys did. It would have been a pretty good trade. I don't know how I missed it, but I guess we had a lot of trades going on, and most of them were, in fact, winners. Now, the bond market, remember what I told you about the bond market. The bond market looks like it wants to cool off. This is an ascending triangle, and if this ascending triangle continues to the downside, it's going to fill this gap. This will create more pressure on the stock market because that means interest rates will go higher because bonds are going lower. So something we have to really, really, really pay attention to. Now, as far as sectors are concerned, look at consumer staples. I told you that consumer staples was going to start leading, and guess what we are? We're leading. Consumer staples was the first sector that actually started moving higher, which was really, really, really good. And you could see here on a graph, this is what I wanted to show you. See how it's coming up? Now look at technology, just to give you a taste and an idea of what I'm talking about. Coming down. So the longer term trend on semiconductors, technology, consumer discretionary, I'm pretty sure still is downwards, but it's starting to, see that? Downwards. But look at the trajectory of other sectors like utilities, for example. They're starting to come up. Look at the trajectory of financial stocks. They look like they're bottoming. They don't look like they have that much more to go. Look at the trajectory on healthcare stocks. So it looks to me, based on what I'm seeing right now, it looks to me like stocks that are or sectors that are more defensive have bottomed out and have started coming back up. Let's look at energy one more. We got to look at energy. Right here. But at the same time, it looks like semiconductors, chips, consumer discretionary could have potentially more downside to go in terms of a time period. There we go. You could see it right here. So it looks like there's potentially a little more downside here in some of these sectors and some of these stocks. Something we have to be very mindful of for the next couple of weeks. And remember, with interest rates, looks like they want to go higher with bonds going lower. Remember, they're inverse of each other. It looks to me there's a good chance that will happen. Again, I'm just giving you guys the broad view. Now, looking at the broad market, U.S. Treasury yield climbed as market participants muled the likely Fed interest rate trajectory amid eased banking jitters. So again, there's yield is climbing. That's not good for tech stocks. Now, in Tuesday's trading session, Wall Street's main average closed lower as higher bond yield continues to put pressure on rate-sensitive tech and other growth stocks, with the Nasdaq 100 dropping to a one-week low. I told you it's going to impact technology and not in a good way. Now, energy stocks gained ground. My cat is messing with the paper there. It's really funny. Energy stocks gained ground on lead gains among the major sectors as crude oil rose to a two-week high on Kurdistan supply risk and banking optimism. AMC Entertainment Holdings jumped over 13% following a report that e-commerce giant Amazon was looking to acquire the theater chain. and McCormick and Company surged over 9% after reporting upbeat first quarter results and reaffirming guidance. Now, Fed Vice Chair of Supervision Michael Barr told Senate Banking Committee hearing on Tuesday that U.S. banking system is sound and resilient. And again, I think that whole fiasco is behind us, and blamed the collapse of Silicon Valley Bank on textbook case of mismanagement. And you know what? I actually agree with his. I agree with him. Data on Tuesday showed that consumer confidence unexpectedly rose to 104 in March, stronger than expected. That's very, very positive for the market. And Richmond Manufacturing Index came in -5, stronger than expected. So things are not doing that bad. Now remember something, and this is something you need to pay attention to. We have tomorrow GDP. So don't be surprised. Don't be surprised if the market is a bit muted today heading into the GDP, because this is going to be the biggest report of the quarter in terms of productivity growth and how America is doing these days. So personal consumption expenditures, I'm looking at the annual rate. I think it'll come in about 1.5, 1.4, and annual rate will probably come in right at 2.7. That's what's baked into the market right now. Now, U.S. futures are pricing in a 42% chance of a 25 basis point rate hike and a 57% chance of no hike. Remember, I showed you this. This is worth seeing. I showed you this is equivalent. SHY is equivalent to a 2-year note, and what it's telling us is this. See that right there? That's the bond market rallying on the Fed, doing what they were doing. So on the Fed telling us that they may continue increasing rates. The bond market does not believe that right now. And as I mentioned, it's priced in 47%. Now, if yield starts going higher and if bond market drops, this number will increase. So if that descending triangle on the bond market right here breaks down, that will be a very, very clear sign that in fact, there's a higher chance that rates will go up. And I honestly think they're going to raise a quarter. But you know what? We've seen stranger things happen before. But if the banking thing is under control, I don't see really a reason for them not to raise a quarter of a basis point. And I think if we stop getting news that the banking sector is on the rocks, I think we'll actually get a better chance of that. It would be kind of weird if Fed stopped raising rates right now, but they may be just pausing for the time being. Today, all eyes are focused on the U.S. pending home sales data. It's coming out in a couple hours. Economists on average forecast the pending home sales will stand at negative 2.3 million compared to previous value of 8.1 million. Ouch. Negative 2.3 million compared to 8.1 million. So we're definitely moving in the wrong direction, but the numbers may not be as bad. And the silver lining is that most of it is already priced in. Crude oil inventories data will be reported later today as well. Keep your eye on the energy sector. It hasn't been doing all that bad lately. Now, Europe, futures are up over 1% with tech and consumer stocks gaining the most. European stocks have received a positive handover from Asia after most of the indexes climbed after tech giant Alibaba split plans. I love the name of that stock. China's composite lagged its Asian peers and closed slightly lower today as investors awaited more data to assess the economic's rebound after dropped severe COVID restrictions. Now, geopolitical tension also weighed on sentiment after China threatened to retaliate if U.S. House Speaker Kevin McCarthy meets Taiwan president during her planned transition of the United States. That will be really, really interesting. Now, Japan's Nikkei stock climbed higher as worries over the banking sector eased around the world. Folks, I'm telling you right now, this banking fiasco is behind us. If volatility is going down, that's it. Now, this is great. One of my favorite stocks, pre-COVID stocks, climbed over 14% in pre-market after the company reported better than expected fourth quarter results. So again, not everything is doing all that bad in terms of retail, and some retail stocks like Lulu. I'm also going to take a look at Crocs. I haven't seen Crocs in a while. Ooh, look at that. Hold on a second. Let's just take a quick look at this thing. Oh, wow, look at that. That's a gap there. Let's look at Crocs and see how they've been doing. They haven't been doing that bad. They've been kind of just sitting on the sidelines. But the point of the matter is, Lulu did pretty well, and also Marathon Petroleum. Now, I told you yesterday that was one of my favorite stocks. It rose more than 1% in pre-market trading after Goldman upgraded the stocks to buy from neutral. That's very, very, very positive. And you could see right here, MPC is doing really, really well. I love this stock. This is the strongest energy stock right now. Speaking of strong stocks, let me tell you which stocks are doing really, really well right now so that you guys can take advantage of these stocks if they pull back. CRM, I really like CRM right now. I like FTNT right now. I like Fastly right now. Notice a lot of speculative stocks are coming around. Copart's looking really good. This stock, EXEL, Excelsis, is looking really good. Let's see here. FedEx isn't looking bad. ERJ, Embraer Psy, I got to look at this stock. It's looking pretty good. TriPoint Homes is looking really good. Darden Restaurants is breaking out, which is really nice. Some are overextended, some are not. Church and Dwight is looking really good. Look at that nice steady trend right there. Hershey's is still chugging along. Elf Beauty's looking good. Dual is looking good. Burling Brands is looking good. I may want to trade one of these stocks. You never know. ANSS is looking really good. Ulta Beauty, Jack Carter was talking about this the other day. That's looking really good. Like this looks a little overextended to me right now. West Pharmaceuticals is looking really, really good too. So that's the list of stocks I'm looking at. Now, there are two stocks that I really like, and I've always on Wednesday give you one long and one short. To the long side, I like Clorox. I know. I couldn't get any more boring than that. But I really, really like Clorox to the upside. It looks really, really good. And I like how it's pulling back a little bit. We may want to get into this trade later today. And to the short side, now, this is a little controversial. I think Tyson Foods may be coming down a little more. This stock has not been doing well, and price of chicken has actually been coming down a little bit. And I think the stock may be a little overdone right now. It bounced up a little bit. It doesn't look like it has that much more firepower. And I think it's going to go from the $58 level all the way to the $55 level. Now, what's interesting is both of these stocks are consumer staple stocks. So I'm bullish one consumer staple stocks, and I'm bearish the other consumer staple stocks. I think that's kind of interesting, right? But Clorox and Bleach and Tyson Foods don't really have much to do with each other. So they're very, very different companies. So I wouldn't really, I wouldn't read too much into that. But chicken production just hasn't been, egg prices have been falling down. The analysts were recommending that stock. Just don't think it's gonna give us that much more upside, and it hasn't rallied with the market at all the last couple of weeks. I think it might have gotten an upgrade or some news, but I've been wanting to sell the stock for a while, like Dish, for example. Let's take a look at Dish. I don't even know how Dish is doing. Remember, Dish is a dish served cold. Making new lows. Yeah, nothing new. But Clorox, I like Clorox. And again, I like consumer staples. There's a very specific reason why Tyson Foods is doing bad right now. It's because egg prices and demand for chicken and prices for chicken have declined, actually. Yes, they have, believe it or not. I'm a chicken expert now. I'm just messing around. But I do like Clorox to the upside, and I like Tyson Foods to the downside. Keep your eye on your energy market, and keep your eye on interest rates. If you guys start seeing, let me show you this, a breakdown here, right? That means higher yield. That's bad for technology. And that's what caused the QQQ to make a little low right here, which I think is going to correct. But again, keep your eye on these stocks. Really, really important. I think the only tech stocks we have right now is Apple, and we'll see how that goes. Now, before I let you go, folks, I believe I've literally cracked the code to the stock market. That's a pretty strong thing to say. It involves one specific chart pattern and 146 little-known stocks. That's right. Now, this pattern has a 100% win rate over the past 5 years on some of the most explosive stocks in the market. But the best part, it doesn't matter if we're in a bull or bear market. It makes no difference. I'm really, really excited about this discovery. And you know me, I get excited a lot. But I just shared exactly how I trade the pattern and these companies. Follow the link below. You don't want to miss out. It's really, really cool. Remember, like this video, subscribe to our channel, and please, 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 leave comments. I respond to them every single day. And if you want to email me, support@marketgeeks.com. I'll talk to you guys soon, and have an amazing day ahead. Bye. Follow the link below. Check it out. You're going to love the channel. Bye.